Hey traders, Jason here from Levitt Brothers. So in this video I want to talk about what I consider to be the best long-term flag patterns on longer-term charts. As traders, we have a tendency, because of technology, to zoom in way too close. Even daily charts, hourly charts, 30-minute, 5-minute, tick charts. Like, we zoom in so close we lose sight of the big picture. And then if we ever back up and look at a multi-year monthly chart with a simple moving average and some simple patterns, we'd realize that the best shorter term trades often come from the stocks that are doing the best longer term. And even if they don't do the best, the odds of success are much better. So what I mean by that is, do I trade off of a monthly chart? No. But if I take the universe of 1,000 stocks and I narrow it to the top 100 based on what stocks are acting best on their monthlies, then my odds of success are significantly higher. Okay? And that's nice. Okay? I don't want to enter a trade that's a coin flip, like maybe I make 20, 30%, but maybe it falls hard. Why not enter a trade where you have really good long-term support? And then you could zoom in with a shorter term chart to get a better entry, but your odds of success are much higher because the long term prospects are in such good shape. All right, so let's go through what I consider to be like the best long term flag patterns that you should be looking for and you should be using to narrow down a trading list. Okay, so here's Microsoft. It's a monthly chart with a 10-month moving average. You can see it rides the moving average up, it rides the moving average down, it gets above the moving average, and then it flags into the moving average, and then it continues on. Okay, and this is what I'm looking for. You get a stock that moves up, gets above its 10 moving average starts trending up, then it flags sideways or down to the moving average, and then it takes off. Here is NVIDIA. Such a pretty pattern for the stock to move up, up here, down, moves up, flags sideways for several months into the moving average, and then takes off. Okay, so if you find a chart that looks this pretty, you can zoom in over here with a daily chart, an hourly chart, whatever you want to find good entries. But if you start here and you narrow your list to charts that look this good on the longer term charts, then your odds of success when you zoom in and get an entry are significantly higher. Let's go through a whole bunch of examples here. So here's Allstate. This one is just starting out. You can see it's trending up above the 10. It just flagged into the 10 and now it's taking off. So this is a brand new one that's looking great. Here's AMD. You can see that it moves up above the 10, moves down below the 10, gets above the 10 and gets scooped up there. Then it flags down and over into the 10 and then takes off. Here is Amazon. Same thing. It moved down many months, gets above its 10. This one, less of a flag pattern, but more of a dip to the 10 and then take off. Broadcom, I keep wanting to say this is a Vago, but obviously it's a Broadcom. Same thing. Okay, trends up, trends down, gets above the 10, flags sideways for several months into the 10, then takes off. Okay, so if you're trying to, if you're flipping through hundreds of charts doing scans and such, and if you could take the scans, or not the scans, but if you could narrow your list, if you can start with 1,000 stocks and you can narrow it down to your top 100 based on what stocks are doing this, move up above an uptrending 10, flagging sideways, you'll have much more success than if this was flagging sideways underneath the 10, or if it was just still under the 10 and it never got above the 10 in the first place, or if it was like just trading up and down above and below the 10. Okay, if you narrow your list and say I'm only going to trade stocks that have this type of a setup, then your odds of success are significantly higher. Here's Chipotle, moves up, gets nice separation between it and the 10. You notice it traded above the 10 here, but it never got separation. So we put in a string of several consecutive up months to get separation. It flags into the 10 and then takes off. Here's Costco, gets above the 10, not a whole lot of separation, calmly flags sideways into the 10, and then it takes off. Here's Decker's, trends up slowly, flags into the 10, and then takes off. See, a lot of traders will look at this on a daily chart and they'll think like, I can't buy this. It was 250 over here. Now it's 550. There's no way I could chase this higher. I missed an opportunity. But when you look at a longer term chart like this and you realize it trended up above the 10, it flagged into the 10, and then it breaks out, then it's not as much of a stretch to play that breakout. Here's Google, a little bit messier. You can see it trades below the 10 for an entire year, moves above the 10, flags sideways, tries to break out, ends up, we end up getting another couple candles sideways into the 10, and then it finally moves. Here's IGV, which is a software ETF, same thing, rides the 10 up, rides the 10 down, rides the 10 up, flags into the 10, and then takes off. Here is JP Morgan. Okay, same thing. Support from the 10, it gets under the 10, no interest playing it. If you play it under the 10, I guess that's fine. You can zoom in with a daily chart, hourly chart, because some of these bounces in here are like 10%. But just know that you're playing a 10% bounce within a downtrend. You're not playing a stock that's actually acting well. So it gets above the 10 starts trending up, you get support, breaks out, flags into the 10, and then it goes. Here's Meta, okay, multi-year low here, trend, moves sideways, mostly into the 10, it kind of missed it there by a month, and then takes off. Here is Pulte, okay, resistance from the 10, resistance, gets above the 10, trend, flags into the 10, and takes off. Here is Q's, okay, same thing. We had trend up here for several years, trend down for an entire year, gets above the 10 over here, gets some support, trends up for 5 months, flags into the 10 for 3 months, and then takes off. Here is SMCI. This has become like a big one in the last year or so. Slowly trended up above the 10 here, breaks out, 3 consecutive big up months, moves sideways for whatever that is, 5-6 candles into the 10, and boom, takes off. Here's SMH, the semiconductor ETF, okay, trends above the 10, trends down below the 10. Again, this is playable here. These are 10% bounces in here. They happen all the time, but just know that you're playing a bounce within a downtrend. You have a major moving average just above that's probably not going to let it go. Eventually it's going to go, but you just have to keep that in mind that like you're buying for a bounce within a downtrend, not because the stock is actually acting well. So it finally breaks out here, gets above the 10, trends up for several months, flags into the 10, and then takes off. TJX, kind of a sloppy pattern here, above and below there, mostly gets knocked down there, but then we get a nice move here. We get separation between the stock and the moving average. We get flags into the 10, and then it goes. One more, Walmart, kind of, boring stock here, above and below the moving average. You got a resistance line here somewhere like near 50, moves above, flags into the 10, a little bit of messiness there, but flags into the 10, never closes below it, and then takes off. Okay, so all I'm saying is that sometimes like we all have to narrow down the market. We all have to take 1,000 stocks, narrow it down to like the top 100, and then we got to look within the top 100 to find the best ones. And you know what? If you're playing stock, my guess is if your winning percentage isn't that high, my guess is that you're playing stocks that look really good on like the hourly chart. But if you backed up and looked at the monthly, you realize the monthly is either a mess moving sideways, or it's actually trending lower below the declining 10 moving average. So if you narrowed your list based on what stocks are doing the best, like above the 10 moving average, which is moving up, I think your odds of success would be significantly greater. You'll have less random stop outs, And, when the market does well for a couple months, like you can see some of these stocks that I showed you, it's like they moved up, they flagged, and then they moved up for many months. And that's where you could buy and just hold and let the market do the work for you. All right, hope you got something out of this, and I will see you next time.